Joining me with more insight on the day's trade is Sasfin Wealth's Andrew Padoa. Andrew, thanks so much for your time today. How much of a market mover do you expect PCE data to be, considering that, one, it's a delayed print, two, hiring is slowing more than we expected, and markets have overwhelmingly priced in a Fed rate cut already?
So, I think it's going to be interesting to see, like you said, with the shutdown, there's a lot of missing pieces to this puzzle, and we'll get more information tomorrow. I think the risk to markets is, like you said, the Fed is expected to cut rates next week, and this is a gauge that they use to kind of get an idea of inflation. Obviously, they want to keep inflation under control, but the labor market's softening, so it's likely to see rate cuts. If we see a far hotter than expected inflation data points coming out tomorrow, that maybe might put a bit of a dampener on the expected rate cuts, and that could create some volatility in markets.
Talking about volatility in markets, commodity markets in particular, oil has had a bit of a week, right? Towards last week, end of last week, there was a lot of optimism around those Ukrainian peace talks, and that, of course, putting pressure on the oil market. But going into this week, those talks have somewhat collapsed, and we're seeing that oil price ticking higher again, as there aren't fears around oversupply concerns. Do you think that there's more room to run for Brent? I mean, it's had a bit of a subdued year, despite the spike during the heightened tensions in the Middle East.
Yes. I think you're spot on. If we look at beginning of this year, we were maybe at $80 a barrel, and we're now at around 63. So despite all the things that have happened around the world this year, geopolitically, we've still seen Brent crude come down a lot.
Yeah.
I think it's unlikely that what goes on here with these peace talks will be sufficient to move the needle. I was looking at Brent crude just now, and maybe it's bumped up slightly, but it's not substantial. So I think this is rather I wouldn't say it's immaterial, but I don't think it's going to be enough to move the needle substantially for oil.
All right, let's get into some company news. Back home, Vodacom has increased its Safaricom holding, owning a majority stake of about 55% at the moment. How are markets reading that move?
So if I look at Vodacom today, give me 1 second, down slightly, which not by much. The market, as a whole was down today. But if I look at Safaricom, it's a pretty good business. They gave some information on Safaricom, its returns on capital, its market share in Kenya. It's a really dominant business, and it makes a lot of money. I think this is just part of Vodacom's strategy to just externalize and just be a bigger player in the African continent. They've got some legal hoops to get round with this purchase, but they're buying it from the Kenyan government, so I think it's pretty likely that this will get approved.
Yeah, most likely to get approved. Let's look at what's playing out in the property sector. Hyprop managing to raise 400 million rand in an oversubscribed book build. Those funds, of course, will be used to refurbish some of its properties and for acquisition plans down the line. I just want to get your sentiment around the property sector. They've had a really, really good run with interest rates coming lower, being reduced over the past year and a half. We've also seen the likes of I think it was Vukile, the likes of a Growth Point, hiking their guidance for next year. The likes of an Equitas also doing really well in their book build this week as well.
Yeah, look, the property sector's been on fire. It's been a fantastic place for investors to be. I think there's a couple of things going on. One is we're seeing some improvements in South Africa. They're getting their rental increases. You're getting your 6% a year. But then critically, obviously the property companies use debt. They are leveraged companies, and they use the gearing to try and enhance their returns. And debt levels are coming down. So their costs are going to come down, and that's creating a leveraged effect for earnings. I actually had a call about half an hour ago with one of my property colleagues, and we were just discussing that, bond yields have come down from 11 to 9. The property stocks, it's almost like an alternative to bonds. But the one thing with the property stocks is you're getting your increase in dividend yields year after year, Whereas if you invest in bonds, you don't get that increase. So I think the property stocks, despite the fantastic run that they've had, I still think they're pretty attractive going forward.
And before we get to your stock pick, let's take a look at that deal where Brimstone seems to be selling a portion of its stake in Oceania. That'll likely bring in around 600 million rand for the group. Just your analysis around that. What do you make of it?
So I think there's maybe a part of it that's good, part of it that's bad. If you look at the bad parts, if you look at what they got versus book value, they did sell it quite a bit below what the book value is for the stake. So that's the negative. But I suppose on the positive side, there's a lot of cash that's just been injected into the business now, which they can use to bring down debt levels, which was, part of the rationale for doing this deal.
All right, let's get your stock pick. Where are you seeing opportunity at the moment?
Sure, in Thailand, I'm going with Amazon. 2025 hasn't been very kind to Amazon. I think it's been Alphabet's year, but maybe 2026 will be Amazon's year. They've morphed from just being this low margin retailer to a powerhouse with the cloud business, as well as on the advertising side. These are the high margin businesses. So I'm pretty optimistic with Amazon going forward.
All right, let's leave it there. Thank you so much for your time and taking us through the day's markets action. You. Now that was Andrew Padoa from Sasfin Wealth.